Good evening, everybody. Hope everybody's getting ready for a nice long weekend. But we've got the great pleasure of having Dr. Barry Burns with us tonight. And he has kind of developed his own trading strategy that's been very successful. And he's a very interesting presenter to watch. So with that, Dr. Burns, welcome back to the Candlestick Forum. We're all anxious to see what your information looks like tonight.
Well, thank you very much. I appreciate that. And yeah, it's always a pleasure to be here. I have a lot of respect for you and for what you do. And I always hear a lot of good comments about you and your work. And I can say that from my own personal experience as well. So, I do pick and choose who I partnership with because I value my reputation. So I only work with people who I know are excellent and have good reputations as well. And well, that's why I'm here. So, Stephen, he's the expert on candlesticks, so I'm not going to be talking a lot about candlesticks today because he's the go-to man on that. So I'll be sharing some other things that I do, although I do also use candlesticks. I want to be clear about that. And so today I'm really going to be covering my overall trading methodology. And so this is a bird's eye view, a big picture of how to put together, at least how I put together, a trading methodology that gives me a probability scenario for trading. And having said that, I do want to acknowledge that I have a lot of friends in the trading world, and there's definitely more than one way to groom a cat. So this is not the only way, and I don't pretend that. This is my 50th year of trading, believe it or not, 50 years. And I know you see my picture down there and you say, Barry, you don't look a day over 40, well, maybe 57. But yeah, my dad was a stock trader and he got me started when I was 8 years old, knee high to a grasshopper. And it was his passion in life. He continued to trade. He started trading when he was 18 and continued to trade until he passed away at 88, God rest his soul. So for 70 years, and even into his last year, he was still trading the stock market, very passionate about it. And I guess that's why he got me started when I was a kid, because he was so passionate about it. He wanted to share that passion with me. And I'm sure glad he did, and I have that same passion. It was contagious. And so that's how I got started trading my dear old dad. And it was a um, wonderful source of camaraderie between the two of us our entire life. So, and yes, this presentation is being recorded, so you'll be able to refer back to it later on. A little bit about me. I am the author of Trend Trading for Dummies. Wiley & Son Publishers came and actually asked me. All my friends who want to be authors hate me because I didn't even want to be an author. And one of my mentors kept insisting, Barry, he said, I will not die until you write a book. You've got to write a trading book. Well, unfortunately, that mentor did pass away before he saw me publish a book. But yeah, Wiley Publishers came and actually asked me. I didn't go out and seek any publishing, and they asked me to write that book. I did, and it's a great book. I'm very, very proud of it. And also, just last year, in fact, the last couple years in a row, Stocks and Commodities Magazine. They do Reader's Choice Awards editions every year. And I'm very pleased to say that I got a couple of Reader's Choice Awards, one for trading courses and another one for technical analysis websites. Very proud of that. And if any of you voted for me, thank you very much. I've also contributed to some other people's books. I work with major companies like Ninja Trader. I've done talks for the Chicago Mercantile Exchange, articles for eSignal, both software and education for Metastock. I've done speaking to the Eurex Exchange, and like I said, I do things with candlestick charting as well. So that's just a small little snippet of my bio. If you want to see the whole thing, feel free to go to topdogtrading.com, click on About Me, but I don't want to bore you with the whole list. So just use that slide to let you know that I didn't fall off the trading turnip truck last Tuesday. All right, a couple of house rules before we get started. First of all, I'm not going to take a lot of questions until the end, and the reason for that is just to respect your schedules. I'm very time conscious. I want to make sure we get done on time, and we did get started a little bit late here, and that's my fault. I was struggling with the technology a little bit. I'm not too used to Omnovia, although I have used it before, but I had to reinstall my Java program and stuff like that, so apologize for that. I'll try to make up that time here in our presentation, but hopefully we'll have some time at the end and I will answer your questions because they are very important. Please do not trade with money you cannot afford to lose. Trading is very risky. And when you start trading, if you start trading anything, or if you start to trade a new methodology, even if you do have experience under your belt, please only trade with a simulator or demo account until you've proven that your methodology works and you can work it. And never, never overextend yourself financially. The information in this presentation is for educational purposes only. I'm not giving any specific buy or sell advice. Trading is extremely risky. The fact is, it says most people don't make any money. Well, I'm going to make it worse. Well, actually, I'm just telling you the truth. Most people lose money trading. That's just the fact. It doesn't help me sell any courses to say that, that's for sure. I'm a lousy salesman anyway. But that's the fact, and that's been documented. And you got to come into this with your eyes wide open. Dealing with the truth, dealing with the reality of the situation is really where you've got to begin. And so, of course, that begs the question, well, dang, I don't want to lose money. I want to be one of the minority who makes money. Of course, that's why you're here. That's why you're trading. So how do you do that? How do you get to be in that unique and elite minority? And the way you really begin down that journey is with your mental attitude, approaching it realistically. And the realistic approach is that successful trading is a profession. So here at Top Dog Trading, and I also know at Candlestick Trading Forum, we do not allow any get-rich-quick mindset. So if you have a get-rich-quick mindset, we love you, but you're off track, please erase that from your mind and start to accept the fact that trading is a real profession, just like any other real profession. And that means that you've got to get a great education, just like you're going to go to college and get a bachelor's. So you got to go to get a great education from a great place, a great educator, and then be a great student of that education. You can't just skim through this stuff and think you got it, because you won't. The devil is in the details. And then, like I said before, do a demo or simulator account, and before you risk any real money, and make sure you can actually implement the methodology. And you're going to find out some new things once you start to practice this. Like, oh, okay, a little more, a little different than just reading this stuff in a book or watching on a video. Once you get in there and start engaging with the live market on the hardware edge of the screen, and then take the next step and start trading with just a little bit of real money, not getting out of your comfort zone, because that will again be another shift in your mentality. We get very emotional about money, and so when you start trading with real money, it's going to change your behavioral finance. And you've got to acknowledge that and get used to that, get comfortable with it. And anyway, that's in a nutshell, the process of becoming a successful trader. So give it time. Don't rush. Just give it the time it deserves. Now, this presentation I'm giving you today, I want to tell you where this came from. This came out of this question. Every year, I do a survey of literally tens of thousands of traders. And usually it's the same questions every year, but I'll mix it up a little bit. And here's just one of the questions on that survey. What are your most common trading problems, struggles, or frustrations? So now I already got one on there. Dang it, I didn't mean to show that. So I invite you guys to go ahead and type in to the chat box there, what are some of your most common trading problems, struggles, or frustrations? I'd be interested to see, because this webinar is designed to answer that question, to give you, to solve your problems, in other words. And it's great that I'm here with you live, because even though obviously I'm doing this in a PowerPoint presentation and the slides are pre-rendered, since I'm with you live, I can actually modify the presentation a bit for you. So depending on your answers that come in, I can focus more on some things than others. So if I come up to a slide that a lot of you are saying is a big problem, I'll spend more time on that slide with you today, because I'm here for you. And if I come across a slide that none of you have a problem with, well, then I'll go ahead and I'll just skip that information altogether, and we'll spend more time on things that do matter to you, that you are struggling with. So I'm here to solve your problems today as much as I can in the next 50 minutes or 45 minutes. And I won't be able to solve all of them, but I'll be able to give you some help with them, certainly. And by the way, let me also say this. I have to apologize in advance. I've got nothing for sale. So I have no financial interest on today's webinar. I literally, at the end of this webinar or anywhere during the webinar, I'm not going to make you any sales offer. I got nothing to sell, not even for $1. So this is all good freebies. In fact, I'll give you one of my courses at the end. If you stick till the end, that's your reward. You actually get one of my courses absolutely free. So how's that? Okay, so let's read some of the questions here we got. Oh, okay, very good. So here's placing stops, when to exit. Another one is get in at the right time and momentum. Making too little money, says Enos. Rebecca says not being able to read the indicators correctly, so price goes in a direction I did not expect, given what the indicators are showing me. Oh, I can definitely help you with that. Winning, yeah, that's a good one. Important to be a winner. Get out of trade too early. Good one, Michael. Robert, enter, then an immediate reversal is a constant problem. I'll help you with that today. R. Smith says selling. Dell says knowing entry points. That's actually my specialty. I have two specialties in this industry that I think I do very, very well and very uniquely, and that is entry points and also the energy of momentum. The one I have listed, you already saw that. Listening to the news, says Terry, Tim, too emotional. Yeah, money is a very emotional thing, isn't it? We get very caught up in it emotionally. Well, let me share with you the most common answers that have come in through the survey, and I think you'll be surprised that a lot of the answers that came in from others are the same answers that you gave. Remember, tens of thousands, literally about, not everybody answered, but the survey goes out to about 50,000 people every year. So here's one of the most common ones. I'll give you the top 5. Okay, we're not going to do a David Letterman top 10 list, but we'll do a top 5 list. Number 1, that people said, I enter the market, let's say they're buying. Then they get stopped out. And right after they get stopped out, the market goes back in the original direction of their trade. So as my mentor at the CME said, he said, Barry, people often are right, but at the wrong time. And that's the problem there, timing their entries. They got the direction right, maybe the trend, but they didn't know when to get in. In other words, they didn't buy the final low, or they had a false breakout or whatever. Here's number 2, getting out of big moves too soon, and so not making the huge profits. And of course, professional trading is all about keeping your losses small and letting your winners run. So just like Michael said this is a problem he's having. So Michael, guess what? You are not the only one. Don't feel bad. Here's number 3, getting stopped out too often. Somebody mentioned that too. In fact, Rich just wrote in, broker searching for your stops. Yeah, feels that way, doesn't it? Feels like the broker is watching your little account, just watching for Richard. And as soon as Rich gets in, the broker says, okay, everybody, listen, everybody on the floor, Rich is in. Let's take out his stops. Okay. I really don't think that's happening, but it does feel that way, doesn't it? I know. It's crazy. I had one guy tell me, it is uncanny how perfectly imperfect I trade. He said, if I could get an award, if I could get a gold brick for how perfectly imperfect I trade every time, I would be a billionaire. It's just crazy. Here's another one, not knowing the best place to exit the market. Several of you talked about that in various forms. Trading a trend that doesn't follow through. You can identify a trend, you get in, and that's when the trend ends. Most of us probably know the phrase, the trend is your friend until the end, and we seem to always be really good at getting in as soon as our friend betrays us. Yeah, I like to say the trend is a fair weather friend. So let's solve these problems, all right? The way you solve these problems is not with an indicator or any one pattern, price pattern, or any one anything. So a lot of people are always looking for some kind of holy grail, an easy answer. The irony is trading doesn't have to be difficult, but on the other hand, there is no one answer to making money. There's certainly no one indicator, no one magic anything. So the way to overcome these problems is actually to create a methodology. And my methodology is all about measuring what I call the energies in the market. Now, what do I mean by energies? So let's define that first. And like I said, I did 2 stints at the Chicago Mercantile Exchange as a student. And both times I was very impressed how being there was so different than being a screen trader, because I started out as a screen trader and I'm still a screen trader now. But the 2 stints I did there was very interesting. You're down on the floor and you feel the energy of the market. People, sometimes it's just dead, right? Nobody's really talking. I mean, people are just kind of mumbling. You hear a little bit here, there. People aren't really moving around too much. Energy in the room, very low. And then other times, all of a sudden, whoosh, energy comes flying in. People are screaming and doing all the funny hand signals and going crazy, pushing and shoving. And heck, I didn't see it, but fistfights even broke out at the CME. And it's just nuts. In fact, they used to hire professional football players, retired professional football players, to work on the floor because they were just so physically big, and that was part of the game. So in the pits. So anyway, I started to see that, oh my gosh, trading is not just about all the little jots and wiggles and things and patterns on the chart. There's something behind that. And what's behind that is the people and the computers. Now, computerized trading dominates the markets. Over 50% of the shares on the New York Stock Exchange are traded by a computer. And when I say traded by a computer, I mean the decision is made by a computer algorithm. So it's not just that a person's pushing a computer button. Now, the decision is made by computers. But so that's a whole nother discussion. Trading has changed so much since the advent of algo trading and high frequency trading and the commoditization of retail trading and all of this and low commissions. But the point is, what doesn't change is the energies. So what are there's 5 energies that I look for. And this is the energy of money flow, essentially. Money flowing in, money flowing out. And we can still use charts for this. You don't have to be on the exchange floor. They're closing down anyway. But we can still do this with screen trading because that energy is mapped on charts. In fact, to me, that's what chart patterns are. They're the mapping of the energy of the market. So I break down these energies into 5 subsets. And my whole trading is a 5-step checklist. And here it is. I'm going to give you the list right now. Number 1, the first thing I look for is trend. That's just direction of the market. Actually, it's not just direction. Trend is properly defined. In fact, in Webster's dictionary, I have this memorized. It's pretty bad when you're memorizing dictionary terms. But trend is defined in Webster's dictionary as the extended general direction. So to truly measure trend, you cannot measure a short-term move. That is not trend. That is a, well, short-term move. And there's also a financial reason to be trading trends because the long-term move gives you a good risk-reward ratio. So you keep your losses small, let your winners run if you get early into the new trend. So very important. Now, a lot of people know about trends, so we won't talk about that much more. Here's energy number 2. I'm going to talk about this one a little bit longer, but we're going to bring up some charts and look at it too. But here's what I see as you guys have answered my question about what problems you're having. A lot of it has to do with energy number 2, and that is momentum. We're having problems with momentum. So what do we mean by momentum? So everybody talks a lot about trend and how great trend is, and yeah, it is. That's number 1, first thing I look at. So yeah, it is important, obviously. But then I look at number 2, and I remember an Australian guy that I learned from, and he's the one who first taught me about this. And he said, here's what you have to ask yourself before every trade you take. And I'm listening all ears. Yeah, what's the question I have to take before, or ask before every trade I take? He says, is it a strong trend or a weak trend? And you know, this is decades ago, but that was the first time I heard that, and I thought, nobody ever told me that before. So I actually wrote it down on a Post-it note, and I attached it to my monitors where I was trading. I trade with 7 monitors, and I left it up there for years. And you know, now of course it's just part of my instincts, but that's a huge thing because trends can be strong or weak. So if the trend is moving up on weakness, it will not continue after you get in, and that's when you get stopped out. If the market's moving up on strength, then The probability is it's going to follow through, make a higher high after you get in. Then the money management technique is we take some profits at that next high, at the next cycle high, next resistance, or time and price come into confluence, and we lock in some money, put some green in our wallet or in our purse, move our stop to break even, and now we are golden. If you could do that on every single trade, how golden would you be? That's what I do. Now, some of my trades turn out to be just small winners. Sometimes they turn into just little scratch trades. But I'll tell you this, I don't have many losses. And that is a huge thing. If you can just minimize your losses, you got to be there. In Chicago, they had a saying that said a scratch is a win. Even though scratch literally means you didn't make any money. But still, they said you were there for the opportunity. And if you didn't take a loss, that's cool. And you just keep doing that, trade every probability scenario over a large sample of data, you come out ahead. And that's the game. So how do you determine a strong trend or a weak trend? You got to know the energy of momentum. And momentum is a potential leading indicator. So I don't normally say this much, but because you guys are having this problem, trend is direction. So trend is kind of like, let's talk about the physics of it. Trend is like you walking north, and you could turn around and walk south within 1 footstep, right? So it has 0 leading properties to it. It's not a leading indicator. In fact, it's a lagging indicator by definition. Momentum, as I said, is a potential leading indicator, and here's why. It has to do with literally the physics of it. Momentum is not like you walking north. It's like a train going north at 60 miles an hour with 30 cars behind it. Okay, now that's a whole different scenario. The physics of it are literally different. Who knows? Somebody type in, somebody impress me. Who knows the mathematical formula for momentum? Do we have any physics people here? Whoever types it in first gets an invisible Cupid doll from Top Dog Trading. An invisible Cupid doll. Yes, you can't see it, but you'll just have to go on faith that you see it. There we go. Yay, Deepak. All right. Yes, mass times velocity. That's it. It's a very simple formula. So think of that train now. It's got velocity, 60 miles an hour going north. Mass, it's got 30 cars behind it. So if you're on that train and they apply the brakes, you can foretell the future, and you don't even need a crystal ball. Nothing magical about it. There's just something mathematical about it. You know, when they apply the brakes, that train going 60 miles an hour with 30 cars behind it, what's going to happen? It's going to keep going down the track. In fact, it's going to keep going north for 1 mile. Literally a mile. How do I know that? Well, I saw it on the Discovery Channel. So seriously. All right. So that's the leading nature of momentum. That's the physics of it. Now let's apply that to the markets. How do we bring that over to the markets? So what we look at is time and sales. And we look at, okay, what's the order flow? So just like in, when you're on the floor of the exchange, you get to see, you get to hear. I mean, there's just no mistaking. Okay, there's a lot of energy coming in. There's a lot of orders coming in real fast. That's velocity. Well, you can see that on your time and sales window. A lot of orders coming through really fast. Then the next thing we need to look at is the mass. That equals volume. Now, that's a little tricky because of a couple things. Number one, the volume histogram on the bottom of your charts is helpful, but it's not completely accurate. Did you know that? There's things called black pools, and traders, especially big traders, institutions, they'll place a lot of their big orders in black pools. It's intentionally to hide their big orders. They don't want you to see them, and they are hidden. Now, they do have to report them eventually. I think the rule now is 4 hours later, or if they do it toward the end of the day, they don't have to report it till the next day. But the problem is if you're trading right at that moment, and my trading is all based on what's the energy of that moment when I'm entering the trade, a little deceiving. So the best we can do is, the histogram is great. We look at that because that is good information. Just understand it's not 100% accurate. But if you look at the time and sales, what we really want to see is what are the size of each order? Because I don't want just a bunch of retail orders coming through, little 1 lots, little 1 contracts, little 100 share orders, whatever your markets you're trading. Okay, that actually could be a counter indication of what's going to happen in the future because most retailers lose money. I want to see where the big orders are coming in. Where are the whales? Where are the institutions? So if I'm trading the minis, I set it to a minimum of 100 contracts. So I don't watch all the time in sales because most of it's meaningless. So I set it to only show a minimum of 100 contracts coming through. So when I start seeing those coming through and coming through with some speed, I'm like, okay, we've got what? Momentum. Velocity times mass. All right, so enough of that. That's a little extra stuff there. I wasn't going to go into all of that. But that's the answer to what a lot of you are having a problem with. Now, cycles is another one. This is another one of my specialties. Timing your entries, timing your exits. So the bottom line is, let me see if I can bring up a drawing tool here. Again, it's been a while since I've used this Omnovia. Let's see here. There's my drawing tools. They've changed some things. Clicking on that, no, that's not it. Try one other spot here. Nope, that ain't it. Okay, well, can you guys see my pointer? Can you see my, I was hoping to be able to draw here. You can see it? Okay. Oh yeah, you can. Oh, I see. Cool. Okay, so yeah, they changed the format here a little bit on Omnovia. Okay, so that's all right. So cycles have to do with this. Markets wiggle up and wiggle down, right? They have kind of sine wave patterns, nice, even trends. So what will happen is you make a higher high, higher low, higher high, higher low. You'll buy that, and then the market will make a lower low, like an ABC complex retrace pattern, and then go up. So people end up getting stopped out, even though they were on the right side of the market. So the point with cycles is we want to buy the final cycle low before the market continues up, or short the final cycle high before the market goes down. That's the key with timing. And I have a timing indicator that I'd be happy to share with you guys absolutely free if you're interested. Make that available to you, show you how to get that at the end of the presentation here today. It nails every cycle high and every cycle low. And happy to give that away. Then energy number 4. So this is again my step list, my checklist. Number 1, what's the trend? Okay, if we have a trend, good. I go to number 2. Is it a strong trend or a weak trend? If it's weak, I'm done. I don't go any further on my checklist. If it's strong, I go to number 3. Okay, when do I want to enter? I want to buy the final low or short the final high so I don't get stopped out. Number 4, now I'm looking for support resistance, and that's the confluence. 3 and 4 is the confluence of time and price. So W.D. Gann taught. And then number 5 is the fractal energy. And the fractal energy is just a fancy term for saying I'm using multiple time frames. So if you're trading setups on a daily chart, I'll also look for setups on a weekly chart, or at least trade in the dominant energy of the weekly chart. You can do this with intraday trading too. Let's say you're trading a 5-minute chart, then I would only take the trade that sets up if it's in the direction of the dominant energy of the 15-minute chart. I like a ratio between the charts of 1 to 3 to 1 to 5. Right, so that's all that means. That's pretty commonly used. We don't have to spend much time on that. Now, I do use indicators. Why do I use indicators? And indicators are somewhat controversial. I understand that. Some people say they don't need indicators. And hey, I've got friends who do trade and trade successfully without indicators. So I wouldn't say you need indicators, but I like to use them personally. I call them instruments. I like that term a little better. And they don't make me money. If indicators made us money, we'd call them, well, I guess we'd call them money makers. But nobody calls them money makers. So don't look for an indicator, one indicator to make you money directly. But the reason I do use indicators is because I treat them this way. It's like I've got a friend, his name's Don, and he's got a little 4-seater airplane. And he'll fly me over to Catalina Island off of Los Angeles here. And, we have a great time, and it's kind of fun to watch him go through his little checklist before he takes off every time. And there's all these cool gauges in there in the cockpit. And now one gauge will tell him how fast he's going. Another one will tell him how high the plane is, the altimeter. Another gauge says, okay, here's your whatever the tilt of the left wing to the right wing. Another one, the tilt from the nose to the tail of the plane. So no one of those instruments flies the plane to Catalina Island, but each one is perfectly accurate mathematically in measuring the energy it was designed to measure. And then he, as the pilot, takes all that information, now having objective measurements of the various energies of what that plane is doing in the air, in order to fly the plane. So that's what I do. Okay, I've talked about the 5 energies. So, but these 5 energies, we've got to have a way of measuring them objectively, because my trading is very objective and rule-based. That's how I have to trade. That's what works for my brain cells. So I use an indicator for trend because it literally gives me a value. It's a mathematical formula. Let's get down to brass tacks here. I'm a very literal guy. I'm not into anything esoteric at all. So indicators, what are they? They're math formulas. They're math equations. That's it. Period at the end. Nothing magical about them. There's just something mathematical about them. So because of that, they're never really wrong. They are always accurately measuring what they're intended to measure. Now, so I use an indicator for each one of the 5 energies so that I have a value, a literal number for each energy, and then I can use those numbers to plug into my trading methodology to create objective rules. And that's how I use indicators. Now, how do we take that information to make money? So, all trading is about determining probability scenarios. There's no certainty in trading. This is one of the reasons it's so psychologically challenging. Human beings, we all have a craving for certainty. It's built into our brain cells. Well, you've got to kind of let that go. You've got to overcome that because you will never have that in trading. And this is why, more than indicators or price patterns or anything else, risk management and money management are what professional traders live and die by, because we know the market can do anything at any time. In fact, I encourage you to write that down. That's another thing you should have on a post-it note on your monitors. The market can do anything at any time. You could have a perfect technical setup, and then news comes across the wires and it blows your technical setups to smithereens. And heck, it doesn't even have to be real news, by the way. It could just be a rumor. It could just be gossip. But news trumps technicals. So you've got to always be managing your risk, use money management, hedge your positions, etc. Okay, I could do a whole presentation just on that. Probably should someday. So here's how we make money. All right, taking that information, here's how we translate that to make money. At each potential entry point where I'm considering to take a trade, I simply ask myself one question. How many of those 5 energies are bullish and how many are bearish? How many are aligned in the same direction? And then based on that, I actually give each trade a score of 1 to 5. I'm scoring the trade. Obviously, the higher the score, the higher the probability of success. And I liken this to taking each trade to court. So I want 5 independent witnesses to establish a preponderance of the evidence. The operative word there is independent. So just putting 5 indicators on a chart doesn't do it. You can put 5 trend indicators on a chart and it's like, dang, I've really nailed the trend. Yeah, but the number 1 is not enough variables to give you a probability scenario. So these 5 energies that I've listed for you, the reason I use these, and there's other energies you can measure volatility, you can measure volume and so forth, but these 5 energies are used because they are non-correlated to each other. You could have trend going up and you can have momentum going down at the exact same time. In fact, it's not even unusual. It happens all the time. In fact, one of my favorite trade setups is based on that. Okay, so that's what I'm doing. I'm waiting for all 5 energies to be bullish or all 5 energies to be bearish, and that's when the odds are on my side. So let's take this to the next level now, and let's look at this on some charts. So energy number 1, trend. We'll go through all 5 energies. So I don't use any proprietary indicators, by the way. My stuff's all very basic and simple. So I just use the 50-period simple moving average as the trend indicator. It indicates trend, but it fits the definition of the dictionary term, which is the extended general direction of the market. So it is angling down, so moving down. That's the extended general direction of the market from here to here. So we're in a downtrend. So for good risk-reward ratio, we'd want to be on the short side. Alrighty. So very simple. Not brain surgery here. You don't have to be as Paris Hilton once said, you don't have to be a rocket surgeon to do this. So here we got a higher low and a higher high, and that's all cool, but I don't define that as a trend. That's just an A, B, C complex retrace against the overall downtrend. So I would rather go short with the 50 MA being down because that gives me a better risk-reward ratio. And by the way, this is one of the trade setups I'm going to give you in that free course I mentioned that I'm giving everybody here. This is called the rubber band trade. The rubber band trade is, the basic structure of it is price bars above a downward angling 50 MA. See that? Price bars above a downward angling 50 MA. It's a great trade. You're going to get all the rules for it in the free course I give you. I take that trade actually every single time it sets up. You can even scan for it if you want to. Now, energy number 2 is momentum. So, strong trend or weak trend, remember? You have a higher high, higher low, higher high, higher low. 50 MA is angling up, but it's a lagging indicator. So now, here's the pregunta. If we entered this low, we would be okay. It makes a higher high. If we bought this higher low, we would not be okay. It does not make a higher high and eventually turns around. So here's the big question. How would you know that this higher low would be okay to buy and this higher low would not be okay to buy? Because the indication of trend is still up. And by the way, is trend up at this snapshot in time? Yes, at that snapshot in time, it is. But again, it has no forward-leading capabilities. So here's the answer. With trend alone, you wouldn't know. You've got to go down here and look at momentum, which, I've got my black curtain on that. Let's pull the curtain, look behind the curtain. So here's the indicator I use for momentum, and you can use all kinds of different indicators, whatever your favorite momentum indicator is. But here's the revelation. So at this low, this higher low, momentum is well above the zero line. See, zero means, well, no momentum, no strength. But we do have strength. Yes, it came off a little bit, but that's normal as the market rests a little between impulse moves. So we have a much stronger, we still have bullish momentum, very strong bullish momentum, and it's because it's above zero. And sure enough, the market continues up and makes a higher high. Now at this place, if we were to consider that, we would say, okay, trend is still up on the hard right edge of the screen. Let's look down here. Whoa, wait a minute. Hold everything. No, momentum came out of the market. It actually went to zero. That is now a weak trend, and therefore there is no way on God's green earth I'm going to buy that. Some aggressive traders I know, they would actually short this. I wouldn't do it. I'm not that aggressive. I'm a more conservative trader. I would short over here. We've got a beautiful candlestick pattern. We're below the 50 MA now, and now momentum is actually below zero. See here, momentum's still just hovering around zero. Here it's holding below zero, and trend is turned over. So that's where I would go short. Okay, number 3, cycles, timing your entry. So the basic pattern, I guess, of cycles is higher, high, well, not even higher, high. It's just a high, a low, a high, a low, a high, a low, a high, a low. Sounds like I'm speaking Hawaiian there. A high, a low, a high, a low, a high, a low. That is not perfectly accurate, but that is an oversimplification of what cycles are. But you can get inverse cycles. You can get cycles where the market goes nowhere. In fact, we have one here. I can get my thing working here again. There we go. So, okay, yeah, sure, you get it a low, a high, a low, a high. But now look here. We get a cycle low. This is my bare bones cycle indicator. It's a little more sophisticated than this, but right now we're just making a simple point. So there's a cycle low, and there's a cycle high. Market didn't go anywhere. That's because the cycle indicator is not about range. It's only about timing. And so again, you cannot use this alone, just like you can't use trend alone, just like you can't use momentum alone. It's all about putting the 5 energies together to see if everything's aligned. You got it all, you got direction and strength and timing. So there's no momentum here. Okay, I should put my momentum indicator up here to show you. But that's what's going on. Momentum is what determines how far the market will move in your direction. So there's no momentum, and therefore it just goes sideways. And so it's just timing. Yeah, okay, got a low, got a high, and then it goes down, makes a lower low, takes out this low, and then momentum comes back into the market. So of the two, now see, listen, this is really interesting. Lots of people don't teach about cycles, so let me just spend an extra second on this. A chart is a two-dimensional object. We've got price on the y-axis, and we've got time on the x-axis. Two-dimensional, that's it, that's all we got. And yet so many people ignore time. They don't have anything, and that's what cycles are. They measure timing. Well, that's 50% of your two-dimensional object. So very important. In fact, W.D. Gann, I'm not a huge Gann fan, but Gann fan? Wow, that's a good one. It's actually a tool called the Gann fan. So hopefully I'm not a tool. But W.D. Gann had some good stuff, and I like especially his basic stuff. And he said that of the two, timing is more important than price. And I'm not sure I agree with that. I think they're both important. I think you just have to have both. So yeah, very important. I'll be happy to share that with you. I'll actually give you a tutorial on how to use it, because how to use the timing indicator is actually counterintuitive. If I just gave it to you, you would be completely lost. You'd say it doesn't work, but it does work when you use it correctly. All right, energy number 4, support resistance. So we've got Fibonacci here. You could use floor trader pivots, previous major highs and lows. There's many different types, but just for our example today, we'll use Fibonacci retracements. So here the market makes an impulse move from a high to a low. So then we draw our percentage retraces. But here's the tricky part about support resistance and why you can't use this alone either. Because market doesn't stop at every support or resistance level. I mean, if it did, the market could never go anywhere, right? So the question is then, well, which support resistance level will hold and the market bounces off of, and which support resistance will the market just slice right through? So you have to look at your other energy. So here we come into the 23.6% retrace right there. And if you look at your timing indicator, it's screaming up. So that means that we do not have the confluence of time and price. We've got a price level, but it's not time for it to put in a high. All right, now let's just, how are we doing on time? Yeah, let's just go to the second arrow here to save a little time today. So here we do bounce off of resistance. So what we're looking at is we got a cluster this high and a 50% retrace. So cluster of resistance makes it a little stronger resistance. Number 2, we got a nice candlestick topping pattern. Number 3, trend is down. Trend is down. See, the 50 MA is angling down. So yeah, we got a little higher low and higher high. But again, that's just an ABC complex retrace and an overall downtrend. Extended general direction is down. So we got that. There's our rubber band trade again, by the way. Remember that? Price above a downward angling 50 MA. Cycle indicator turns, meaning it's time for this to put in a high, confluence of time and price. And momentum, very weak to the upside. See, when we move down, we move down on strength. Then the next low, move down on strength too, but not as much, right? That showed a little bit of momentum shift. So then it comes back up on very little momentum. Again, to go through resistance, it usually takes some strength of the market, velocity of orders, volume, big orders, all that kind of stuff. So we just get this little complex retrace. It's basically the market reloading, I call it. And then boom, we come on back down. And then momentum kicks back down to the downside. And the 5th and final energy is what I call the fractal energy, just a fancy name for multiple time frames, very common practice. So here I got a 100-tick chart of the NQ, a 300 chart of the NQ. So this longer term chart would be my fractal energy. So I'm looking for setups here on the short-term chart. It's meandering above the 50 MA, then it meanders below the 50 MA. So kind of a modest trend shift pattern. Yeah, again, not going to trade that by itself. But then we get a nice little candlestick reversal pattern here, cycle high, momentum's 0. So this is all looking pretty good. Then I look at my next higher time frame. What is the dominant energy on the next higher time frame? Well, trend is down, cycle is down, momentum is down. Beautiful. Everything is aligned to the downside. Therefore, yes, I would take that trade short. All right, so let's put it all together, and hopefully we'll have a few minutes for some questions here. So let's do a little quiz. All right, I've been doing all the talking, and I've done that intentionally since we got started a little bit late. But let's see how well I taught. This is actually a test for me, not for you. Let's see how well I taught today. So my 5 energy method is I just literally have a checklist of 5 things I look for. Only other thing I look at is the economic news reports that are, obviously on the calendar. But other than that, I'm looking for what's the energy of the market order flow at the moment I'm looking to get in. Not yesterday, not 6 weeks ago, but right now at the time I'm getting in, because that's what matters for this order. So we go through our list of 6. Number 1, trend. So price is below the 50 MA, which is the red line, kicks back above it, retraces. Now here's the key. Number 1, we're starting a new trend. The word new is very important there. Remember, the trend is your friend until the end. So we don't want to trade toward the end. That messes up our win-loss ratio because the trend is no longer our friend at the end. And it also messes up our risk-reward ratio because the market doesn't have as far to go. I want to get in as early in a new trend as possible. That's my first cycle low in a new indication of trend. I'm above the 50 MA. I use the 50 MA as my line in the sand between a bull and bear market. So I'm getting early into a new trend. Step 1, good. Is that enough to take a trade? Heck to the no. So now we go to number 2, numero dos. Zwei for those who know German. Duo for those who know Korean. Let's see, what else? What other languages do I know? Ni, that's Japanese for 2. See, I'm multilingual with the number 2. I know the number 2 in 6 different languages. Very impressive. All right, so what is the momentum here? So we've got trend starting to go up, but is it a strong trend or a weak trend? Here's our trend indicator. Now, here's your quiz. Is this a strong trend or a weak trend at this time? At this time. Go ahead, type your answers into the question box, and let's see if I made that clear. Again, this is more of a test of me to see if I made it clear or not. Springfield Girl, I like that name. And Greg and Bill, oh, they're going by so fast now I can't even read them all. Philip and Lou and Rick and Terry and Dell and Clint and Rich. Yep. And Philip and SV and Siri and Philip and Travis and Michael and Mickey. You guys are so responsive. I really appreciate that. Thank you very much. That's nice. Okay, so the answer is, and you are all correct, we've got 100% correct answers. You guys are great students. The answer is yes, it is strong. The reason is that it's well above the 0 line here. So if you didn't answer and you weren't sure, because sometimes people think, well, yeah, but it's coming down a little bit, so maybe it's weak. That is to be expected. That is normal. Whenever the market takes a pause between impulse moves, yes, momentum is coming out of the market a little bit. The issue is we don't want too much momentum to come out of the market. And from an actual money flow perspective, what that means is, remember, these indicators are just mapping stuff. So in the real world of trading, what we're looking for is for there to be strength going up. In other words, buying, real positional buying taking place to the upside. And then when the market retraces a little bit, we don't want big strong orders from the whales. What we want is just maybe some profit taking and maybe a few retailers going short. Then, who cares? That's just normal stuff. But what we don't want is strong professional orders coming in and shorting this thing. If that happens, then momentum will go to the downside. And that's what we're measuring. Okay, makes sense? Then we go to, let's see, momentum. Number 3 now, cycles. So yes, cycle is low. So we got our timing. It's time for the market to put in a low. Number 4, support of that red line's your 50 period, or I'm sorry, the 50% retrace. So it got support, confluence of time and price. And then number 5, we're looking at the higher time frame. Now, this is interesting. Okay, look at this. So on the higher time frame here, we've got the 50 MA coming down. So the trend indication is down. Remember, that's just the indication. It's an indicator. But the problem with that is the trend is a lagging indicator. And this, it doesn't say what time frame that chart is, does it? Well, let's say that this is a 5-minute chart on the left and the 15-minute chart on the right, just to have something to reference. So the problem is that 15-minute chart is 3 times slower than the 5-minute chart. There's only 1 bar here on the 15-minute chart for every 3 bars on the 5-minute chart. So it's already a slower chart, and we already know that the 50 MA is a lagging indicator. So why would you use a lagging indicator on a already 3 times slower chart to confirm a trade on the short-term chart? It's just not going to be a very timely signal, is my point. So we use the faster indicators, at least this is what I do. Cycle is up, momentum is screaming up, and therefore that's what I need. Those are faster indications. They respond quicker to the market, and that helps to make up for the lag of the 3-to-1 ratio between these 2 time frames. So I rely on cycle and momentum to confirm my trade on the shorter term time frame. If I get trend too, that's great, but that's not what's most important to me. All right, so let's summarize here. We're just about done, and I thought I'd have more time left, but anyway, that's okay. We're going to still answer a couple questions here maybe. So let's summarize. What we're doing is we're waiting for the alignment of the 5 energies to put the odds on your side. And my trading method is really complex. You know, I remember I was invited to a trading club out in, better not say, because that's one of the biggest trading clubs in the world actually. So I won't say where it was, but very nice people, very, very nice people, great hospitality, sweet, very receptive, had a great experience there. But, you know, they invited me to dinner the night before, which was, again, very nice. And they brought out, this was the inner circle of the trading club, about 20 of them, and they brought out this huge, man, not even a manual. This thing was just huge. I don't even know how to describe it. It was so big. And they were working on a trading system. And they'd been working on it for like 2.5 years already. And it had to have 1,000 pages in it. And they, you know, dropped it on the table, and they were all impressed with themselves. And you know, I was nice about it. So, wow, that's a lot of work. That's very impressive. You guys are very diligent. Certainly not lazy, which is true. But in my mind, I'm thinking, wow, that's not how I learned to trade. In fact, my trading method used to be pretty complex till I went to Chicago and I traded with those guys, and what they were doing was brain dead simple, and they were making a lot more money than I was. And so that's when I learned to simplify. So here's my trading method now. It's not 1,000 pages, it's 1 sentence. I trade a trend that is strong, energy number 2, at the right time, that's cycles, with support at your back, buying off support resistance, and then confirmed by the bigger scale. Period. The end. That's it. And I'll tell you, when your method is simple, it takes a lot of stress off. The more you add to it, there's a lot of diminishing returns. Also, and by the way, number 6 on the survey of problems people had, well, I just happened to remember this, was information overload or mental overwhelm. Well, by only looking at 5 things, you avoid that. And you can, you know, trade with simplicity, and 5 non-correlated variables is enough to give you a probability scenario. I don't like to go less than that, because then you lose that edge of the probability scenario. But I found that I don't make more money if I use more. You can use more, but why? It doesn't make me more money. So there's a lot of other good stuff you can use. I'm not saying these are the only good things. There's not. I got friends who trade all kinds of great stuff, and they make money. But this is what works for me. Method's very robust and adaptable. I do this for stocks, commodities, options, currencies, futures, because order flow is order flow. And I also use the same 5 energy method for investing. I manage a pension plan, so I use it for investing. But in investing, I'll also look at fundamental analysis. And I use it for swing trading and day trading as well. There I don't look at fundamental analysis at all. It's pure technical analysis. And it's simple, and it's objective. And, I think we can all count to 5. So here's the, wow, look at that. Right at the, oh, I want 1 minute over. Dang. So here's the stuff I promised you for free today. Again, nothing for sale, just freebies. Here's my email address, by the way, barry@topdogtrading.com. Feel free to email any questions that you have that I wasn't able to get to today. And here's your free course. It is a 5-day video correspondence course. And so each day you get a little video. It's about 20 minutes long. Try to keep all my stuff into nice, tight little bundles so that you don't get overwhelmed. Again, we want to avoid information overload. The topic of the course is how pros trade different than amateurs. And believe you me, we trade very differently than amateurs. A lot of the stuff that maybe you've read in books or whatever might have worked at one time, but as I say, trading's changed a lot since the 1940s, even the 1950s. I was born in 59, and dang, we had black and white TV, and we were lucky to have it. So, but we certainly didn't have computers, and we didn't have direct access to the markets, and commissions cost us $50 a side, and we didn't have high-frequency traders. So things are different, and you gotta have up-to-date current information. So you get 5 videos. At the end of it is an interactive quiz at the end of each video. I teach with feedback loops. That means I teach you a lesson, I demonstrate it, and then there's a little, actually it's in the video, a quiz, where you answer some questions, and if you get any wrong, it shows you that and it tells you the right answer. Nobody knows except you, but that way you make sure you really understood the lesson. You're never left to guessing. And then in this course also you do get my rubber band trade that I showed you a little bit. I showed you the basic structure, but in this course you get all the rules and the details. And then my personal cycle indicator, which I promised you, yes, that is available on another webinar. So again, giving you the indicator, showing you how to set it up on your charts. We do that at the beginning of the webinar in the first 15 minutes. And then the last 45 minutes, I show you how to trade it. There's certain patterns on that indicator that are just deadly accurate. It's amazing how precise they are. And no charge for that either. That's also a freebie, but you've got to have the tutorial with it in order to trade it accurately. So there's the link. We got a little bit.ly link here for you today. So just go to that link and opt in, and you'll get all that stuff via email with my blessing. And then, of course, if you want any personal attention, feel free to email me at barry@topdogtrading.com. And you never bother me. I love talking with traders, so please feel free to contact me and ask any questions you have, because I love working with traders. So don't worry about bothering me. You couldn't bother me as long as we're talking about trading. I'm having fun. So, okay, we're 3 minutes over, so I guess I better stop right there. Thank you to Stephen and Becky and Rick and everybody at Candlestick Trading Forum for inviting me into your room today. You've been very gracious and kind, and love working with you guys and think the world of you. So thank you very much. And to everybody who came today, thank you very much. Got a good turnout here today. And thank you for being so kind. I see no hecklers, no, what do they call them? Trolls. Everybody is being very kind and sweet and appreciative. So I appreciate your appreciation. So have a great rest of the day, everybody, and happy trades.
Thank you very much, Dr. Burns. Very good information. Take a look at it. Anything that you can add to the common sense aspects of investing by somebody that's been using it successfully just adds to your trading repertoire. So with that, everybody have a good holiday weekend. Again, Dr. Burns, thank you very much. This is good information. We'll see everybody Monday.